Have you been watching the markets and seen a lot of what's going on and heard some of the terminology like bear market or bull market and wondered what the differences really are and how that might pertain to your situation? Enjoy this video as we take another deep dive into some terminology. Welcome back to the Financial Beat channel. For those of you that are returning back again, thanks for stopping by again. And for those of you this might be your first time, I'm the host of the channel, Logan Sadler. And as we talked about the teaser, we're going to talk about bear and bull markets. Now, a lot of you out there, again, some of you guys are all different levels and different experiences. So some of you might be very familiar with some of this terminology, and some of you have heard it and maybe are looking for a little bit further of an explanation. Again, I'm Logan Sadler. I'm the host here of the channel. And I have a lot of conversations. I'm a financial advisor, so a lot of our conversations on this channel are pretty much centered around retirement education. So again, thanks for stopping by. And if you haven't yet, go ahead and click subscribe and leave a comment and let us know some other videos you guys might like to see. So let's go ahead and jump in here. So let's go ahead and start with a bear market. Now, a lot of you guys out there have heard bear market. Now, typically what that means is the markets are probably volatile and they're probably down, right? A bear market is typically when the markets have risen from their highs and now dropped to their lows. And typically it's around a 20% loss or a 20% downturn is when you will see we enter bear market territory. Now, it's very important to know because a lot of different things go on during bear markets, right? There might be panic, there might be inflation, there might be interest rate hikes, or there might be a global pandemic, right? So many different things can cause a bear market. And bear market, depending on how you're invested, might have a pretty big effect on your overall retirement accounts or your investment accounts. And depending on what you're in, again, it could have a bigger effect than others. So it's very important to know where you stand on that. And if you haven't, go ahead and check out some of our other videos over here on risk. Now, a bear market, like I said, is from the top to the lows, which it goes down around 20%, which we have, experienced as recently as 2022. So there was some times where the markets were down around that, and we were definitely in bear market territory. And one of the biggest things is what the bear market tends to do is what a lot of people don't understand is it sounds like the markets are down a lot, right? A bear market typically lasts on average, again, some are longer, some are shorter, but on average, they last about a year. So that is the average time frame of a bear market. Now, a bull market, now for those of you wondering why it's a bull market, they're using those horns, right, and raising up. And typically a bull market is when we rose over 20%. So basically it allows you to kind of tell you when things have kind of came back. One thing I always like to tell you is some things could be in a bear market and others may not be, right? Certain sectors, commodities or bonds or stocks or many different things could be in a bull or bear market. But it's important to understand that the bull market is when things have risen, right? Typically around that 20% level. Positive is when you will see we enter bull market territory. One thing that's very funny is the average length here of the bull market is on average around 7 years long. Now, what is hilarious is, right, when we talk to a lot of investors or when we go through things, sometimes it feels like the markets are down more than they're up. But a lot of the research shows that, again, the average bear market is about a year. The average bull market is about a 7-year period. So typically the markets are up higher, longer. And again, when you're investing in the markets, always understand your risk level, making sure you understand what you're invested in because it is a place where things can always change and the capital markets are always shifting. So hopefully that gave you guys some good little insight there on what the differences are because again, they definitely have an impact and that's a terminology and a term that you'll hear thrown around quite a lot on channels like this or where you're having conversations out and about. So hopefully you enjoyed that breakdown. Again, if you haven't yet, go ahead and click like and subscribe. And again, let us know some other videos you might like to see. Thanks for stopping by the Financial Beat YouTube channel. I'm Logan Sadler. We'll see you next time.